Last week was a massive week on the markets, the Aussie stocks, US stocks, cryptocurrencies. So I've got a huge video for you guys today and throughout the week. I'm going to try and cover as many stocks as I possibly can. I know that's something that I try and do with each video. So let's get into this one. Now, if you're new to the channel, my name's Jason Pizzino. I cover US stocks, Aussie stocks, cryptocurrencies, and economic market cycles. If that sounds like what you have come to YouTube searching for, be sure to hit the subscribe button down below. And if you find value from the video, give us a like anytime throughout the video. Just click the little thumbs up down below. It helps the channel out so much in the algorithm, especially when Google and YouTube are getting hit so hard by the Aussie government to change over different laws and give our information to the giant mega corporation media outlets. Now, if you haven't heard of that, it is something that is being planned in the background by the Aussie government. We don't want it. Just thought I'd let you know about that so you know what could be happening to your YouTube. Guys, today's video, we're going to dive into a few stocks. I say 5, but I think there might be a few more. I'm going to review some of the stocks that I was looking at over the past weeks and check out stuff that has been making us some profits. Brainchip is one of those, and there's a couple more in there that I'll get to. But first, I want to quickly touch on the economic market cycles. There's always bad news coming out when it comes to the property cycle and basically property prices. But I think there is something a little bit different that is actually happening behind the scenes. So I'm not going to make this a huge part of the videos because obviously you're here for ASX stocks, but I think it's important to include both and understand where we are with property and with stocks and all of our investments all in one. So with that said, let's have a quick look at this email, and it's a service that I've subscribed to for many years now. I'd say about 8. Pretty much on the money. Aussie economist Phil Anderson. Let's have a quick look at this. Basically, he's just going through some recent headlines of last week. Americans surprise Wall Street with spending boom during coronavirus. China's stock mania lures the most traders since 2015, and Southeast Queensland land market has its strongest sale in 5 years. Now, these are all news articles that they have researched themselves. Basically, what they're saying here is some of the news is telling us that we should be heading down into some sort of recession and economic crash based on the fact that we can't afford property prices. Yet we're seeing so many different results in the actual numbers. Now, which should you believe? It's so much easier to believe the bad news, but the numbers are showing the opposite. Think about the property prices in your area in that lower bracket, the under 500,000 or 600,000. I know that sounds like it's a lower bracket, but yes, that's what it is. Check those out and have a look at the numbers. Are they staying steady? Are they dropping 5-ish%? Or have they started to increase? What the outlets are trying to tell us is that they are dropping by 20 to 30%. Personally, I cannot see that happening. That is not going to happen at this time in the cycle. I've got other videos on the channel which will dive into that at some other point in the future. So if you do like the sound of learning a bit more about economic cycles, let me know in the comments down below. With that said, let's jump across into the charts for this week. Here we are at the first thing I want to have a quick look at, and it's top 20 traded Australian shares. Why I think this is important is because it shows which are the stocks that are coming up most in our heads and in our searches, essentially, which then comes back into our heads. So you can see here, a lot of the comments that come through on the YouTube videos can be related back to these top 20 traded Australian shares. Now, I'm mentioning this because I think it's an important part of the mindset to understand where our information is coming from. CSL, Commonwealth Bank, Zip pops up all too often. Webjet comes up, Afterpay, Kogan, you name it. Everything that has come up in the news in the last week, the stuff that's booming, is in the top 20 traded Australian shares. So it's just a self-fulfilling prophecy. It is moving in the market. It's talked about, it's moving, it's talked about, and basically you can make some pretty good gains from it. The only thing you don't want to do is get caught up in the FOMO and lose from it, and that's what we talk about when it comes to our trades. When these stocks are being talked about so much, we just want to be very wary that we're not buying in at the top. So with that said, let's have a look at the first one, which is Brainchip. Now, Brainchip, BRN. This is something that we talked about on the 5th of August. I've got the video here. I'll play a little clip of it for you right now. We just have to be patient. People expect this to happen tomorrow or the next day. Don't worry, the price is at 18 cents, goes up to 20 cents, big deal, 10%. But if it falls back to 13 cents, we've scooped up a really nice saving. If that doesn't happen, what would invalidate that is if we get a close above these previous extra highs. So this high was at 21 cents, and that's where I would see this then being invalidated. And I'll be like, okay, well, I think we better jump on the bandwagon from this point and go with the stock. BRN, also love that. So you can see in the video, we were looking at it on the 5th, and the buy signal was buy above 21 cents. Not financial advice, you guys should know that by now. Disclaimers are all in the description. The trade was filled, and so far we're up with paper profits, unless you've actually sold the trade, of 50%. So this was a trade that was starting to pump. We saw some really good buy signals way down here at 3 to 6 cents. And the first time I saw it was at about 20 or 18 cents, and the buy signal was just above 20 cents. I think that looks pretty good. It looks like we are potentially coming to some resistance here. You can see it around 35 cents, but let's see where the trade goes. We don't want to exit just because we're scared. It has to be in our plan before we get in. And like you would hear on every single one of my videos, I just use a tight stop when these stocks start to get really hot. And you can see down the bottom of these, the volume's increased. The prices are escalating. The incline is just getting further and further up like a hockey stick, which is an exponential move, and those things can't last forever. So personally, I like to just use a tight stop as these things start to boom faster and faster. That could be anywhere from the low, or the swing low of a 2-day or a 3-day chart, maybe of the close of the previous week. If you want to know more about that, let me know in the comments down below, and I'll put together a trading analysis video on technical analysis. So BRN, that's been a beautiful one for us. 50%-ish so far, maybe 60%, maybe a little bit less. Let's have a look at the next one, and that is Afterpay. Afterpay, we were looking at it back just last week, actually, 5 days ago, and I was thinking, look, it's going to be probably an area of 65 to 75 bucks. That would be a support and resistance zone. And if that didn't hold, then I was probably looking at, from the video, it said 55 bucks, potentially coming way back down. The volume is decreasing, which isn't a great sign, but it's not completely dead. It's still moving up. Got to go with the trend. And I thought we would see about $85 to $86 as the top. I got that from a weekly swing, punching the low to the high to the next low. And that punches out at around 87, so 86, 85 just there. That's a 100% move. And so far, that's what we've seen. Push a little bit further up. Did we get a high of 90? No, just $89. Trend is still up. That one is still in play. The stops can be below the lows here on the swing, or you can continue to trail the low of the week. That just locks in some profit if this turns against us pretty heavily. This is getting later on in the trade. Volume's dropping, trend's your friend. Stay with it, but just be wary. Next stock we're looking at is Kogan. Jumping in the middle of these charts. Guys, if you're finding value from this, be sure to leave a like down below and subscribe. I know many of you haven't subscribed already that are watching this. My analytics shows up that it's somewhere around 80% of you are watching without being subscribed. Be sure to hit that subscribe button and show your support for the channel. If you want to unsubscribe later, all it takes is one extra click. Sorry about that. But be sure to like the video as well, so I know that you guys are enjoying the videos. Back to the charts. Big one we were looking at way back here as well, somewhere in early to late July. And that pricing, it was this one here, August 3rd. And that pricing was the $18, $19 mark. And again, I was looking at these areas being support and resistance. There's not much other data there. That's why I thought these would be the areas. And said if we break that, then we're going to shoot up a bit higher. When you're up here, the potential for profit is getting a lot less. Like to get 30%, the market has to move a hell of a lot. But when you're at these lower points, to get 30%, it doesn't have to move that much. And it's a much easier way to get your 30%. So that's why I like to just keep things a little bit tighter when we are going through these huge moves to the north side, to the upside. So that's the way I like to play it. And again, you can see a nice clean swing trade on this one here. There was the low there, another low here, up, back. As we break through the tops, that's a signal to go long. There's your trade, in you go. And in terms of a profit, somewhere around 15 or so % from the video. Like I said, profit's a profit, but it's not something that gets me super excited because I'm looking for things that have a lot bigger asymmetric risk. So I want to see things that are going to move up a lot higher. There's more room to move. And the downside, it kind of keeps me in nice and tight. I'm not going to lose too much if the trade goes against me, and I don't have to keep my stops too far away from the action. Before I jump into the next view, Kogan is looking late in the trade for me. It's not to say that it's over, but so far a lot of people have been making money on that, and at some point a lot of people are going to cash in. Same deal goes for Afterpay, Brainchip, so it might be at the same point. So if you're already in, great, congratulations on the profit. If you're not already in, personally, my own personal plan says not to get in at these late stages unless a setup occurs like this sort of swing here that allows me an entry. All right, with that said, let's move across to the next view. Zip. Zip is on our list. Before I get into Zip, no ads on the charts. If you want to use this charting software, I have a link in the description down below. When you join up, you can get an absolutely free trial, and it's free as well, but you also get the ads. If you don't want to see all these ads, then you have to pay for a subscription, and it gets a nice clean surface for you. You don't need to have all these ads popping up all the time. Let's move on to the chart. Now, Zip has been a big one that I've talked about a lot. There are a lot of people who have loved this stock. They have been happy buying in at $6 and seeing it go to $7.80. The smart guys bought in way back down here in April at $2 or $1, and now they're up 700%. So congratulations to those guys. When we first started looking at this stock, it was around $6.20, dropped to around $6 or $5.80. And for me, the reward to risk is just not enough at this point. Like I said in other videos, this could go to $10, $20. It could continue on much further, but I don't like this level just yet. I want to see some accumulation, more accumulation. I don't want to see it just shoot off into the atmosphere and never come back, which is why it's not something that I'm really concerned with right now. I want to see the volume pick up, and I want to see it break the highs and continue to consolidate above this high level of $7.88. So somewhere around just above $8, which is a psychological level. Of course, the trend's still up, but I've talked about why it's not something that I would like to put into my trades. It's not a particular stock that I absolutely love. Congratulations to the guys who got in early and have made huge gains. That's amazing. Let's move on to EML. EML is something I talked about in my first ASX video going back a few months now. We were looking at this level of $2.70 to $3 as a potential buy zone because we saw support at these levels on previous highs in April. The market has come back to around $2.95, so it's in that zone. People have asked, is it a time to buy? What are the company fundamentals? There are a lot of people in this pay sector. Why aren't they booming like the other ones? That's something I would be asking, what's wrong with the company? If you don't want to get down that path, then I'll just be looking at EML as a break above this trend line. So this is a new trend line that I've put in here, and that one basically just connects the top to the current recent top, and it's already hit it once and reversed, but it hasn't broken these lows yet. So for me, I would want to see this break above, potentially come back and just retest this zone before we take off again. That to me is more of a buy signal than trying to pick when the low is. It is potentially forming a base here at $3, so it's not a bad zone. Then you would keep your stops nice and tight. It gives us that opportunity to keep them very tight, just under this low here of $2.95, so you'd keep it just under there. But in terms of EML, maybe get to the company fundamentals and have a look at that in more detail if you want this one to be a long-term hold. Let's move across to our next stock, and that's Mesoblast. Now this one was up on the CBA top 20 traded Australian shares. Number 2, Mesoblast, 51% buy, 49% sell. This came to me from a client that I was speaking with back in mid-July. He wanted to get in on this stock, and he was very eager to understand how to open up accounts and fund them. And so that's what we did in our sessions together. And that's been an absolute killer for my client. He has got in somewhere, I don't know, it was $3 or $4, maybe mid threes, currently at 520, and it looks like a really good long-term trend. You can just see these swings are continuing up. The lows overall, the major lows, are getting that little bit higher besides COVID here, but we all know what happened there. It just shot up after that. Another good low base, and we're up again. Yeah, sure, there's some resistance happening here, so just be aware, have your patience. But Mesoblast, maybe keep that on the radar and understand what it is they do. Do your research in terms of the company fundamentals. So in terms of what we looked at today, it was really a good overview, a good update, because I think it's important to review these things. Like I've put in the beginning of the videos multiple times, we should review what we're doing, just not bouncing around from one YouTube video to the next. That gets confusing and doesn't help out in our investment plans. So the action steps for me from this video are to continue watching those stocks if we're in positions already. These are the ones that are at all-time highs and continuing to push higher. The reason being is that it could possibly be coming towards the end of a bull market and there could be some point for reversal. We don't know yet. That's why we keep watching them. In terms of positions, if you're not already in some, I've listed just a couple at the end. We're looking at EML and Mesoblast, that was MSB. Now, these ones have started to move up, or Mesoblast has, but EML hasn't just yet. So if you're looking for trades, do the research on the company if it's something you want to hold long-term. But if it's a short-term investment, a short-term trade, the company fundamentals don't matter as much if you are just using technical analysis to make a trade and potentially get a return. And lastly, I just touched on at the beginning that we're at the mid-cycle slowdown. The news is coming out that the numbers are actually a lot better for property than a lot of the doom and gloom sayers are telling us that, we should be going through some sort of major depression. I don't think that's the case. I think we're going to be heading up for the next several years and everything is looking quite good because the interest rates are very low and money is very cheap. I'm not saying that I think the economy is healthy with the way it's being run, with so many dollars being printed and so much debt and all that sort of stuff. That's not what I'm saying. I'm just looking in terms of potential for investment to make a return. So as always, if you have enjoyed that video, let us know in the comments down below and leave a like. Also subscribe, and I'll see you guys at the next video. Let me know what you want to see next. Maybe some US stocks now that we're punching through all-time highs on the S&P 500. Who knows? Maybe Tesla hits 3,000 before it does its stock split. Who knows? But I appreciate you guys sticking around till the end of the video. Be sure to leave your comments. I'll see you guys at the next video. And until then, remember to have more fun to get more done.